Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze Adobe stock. I will talk about why I believe Adobe stock is undervalued now and Adobe's long-term growth prospects in AI. Before I start, I always like to give you some context first. Adobe has dropped a lot since the beginning of the year because of several reasons. First, the market is very pessimistic about Adobe's AI strategy. The market is concerned that OpenAI Sora may disrupt Adobe's Creative Cloud business. Second, Adobe reported strong earnings in the most recent quarter, but its revenue guidance for the next quarter is lower than expected. So Adobe stock dropped as much as 10% right after the most recent earnings release. And third, the US Fed is planning to hold high rates for longer until the end of the year. In recent months, the US inflation has been higher than expected, so the US Fed may only have one rate cut this year or not have any rate cuts at all this year if the US inflation continues to be higher than expected. Of course, higher rates affect tech stocks the most. So all these things have caused Adobe stock to drop a lot since the beginning of the year. So in this video, I'm going to explain why I believe Adobe stock is undervalued now. I will explain why I believe Adobe stock will eventually recover. You will learn about these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about Adobe's financials and its biggest risk going forward, Adobe's long-term growth prospects, Adobe stock valuation, and will I buy Adobe stock. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look. Let's start. In many of my videos, I like to show you my stock portfolios to explain my investing strategy over time. This is one of my stock portfolios. It's separated into 3 different accounts. This is the first account. You can see there are several multi-bagger stocks. For example, MasterCard, Microsoft, Visa, and Amazon. Google is almost a 2-bagger stock in this account. My investing strategy is to keep investing in the best wide moat businesses that are undervalued, then invest in them for the long term so they can grow exponentially and become multi-bagger stocks over time. I made a huge mistake of selling my Meta shares around 2 years ago, so I bought back some Meta shares a few months ago when Meta was greatly undervalued. I think this is the right call. Around 2 years ago, I started investing in semiconductor companies because I knew that semiconductor is the most important industry that will enable many technological breakthroughs. I started investing in the best semiconductor companies such as TSMC and ASML. I have been buying them gradually over the past 2 years. I believe this is the right call because they are benefiting a lot from AI now. This is my second account. There are several multi-baggers in these accounts. The biggest multi-bagger is Apple. I invested in Apple many years ago. Now it's already a 10-bagger stock in this account. There are other multi-baggers such as Google and Visa. Microsoft is almost a 2-bagger in these accounts. I have Adobe in this account. I bought Adobe stock when it was much more undervalued before. Occasionally, I do sell stocks if they're overvalued. Then I like to reinvest the money in more undervalued stocks. For example, I sold my remaining AMD shares in this account recently and made a 57% realized gain because I believe it's overvalued. Then I used the proceeds and bought back more Nvidia shares recently because I believe Nvidia is much more undervalued. When AMD becomes undervalued again, I will buy it back. This is my third account. I started this account around 2 or 3 years ago. This account is doing well. I've invested in many outstanding businesses such as Microsoft, Intrinsic Inc., American Express, MasterCard, Nvidia, Visa, Amazon, Google, TSMC, Synopsys, Apple, Broadcom, Meta, Adobe, and MCI Inc. I bought many of these stocks over the past 12 months, so it will take some time for them to become multi-bagger stocks. However, I did make several investing mistakes. I need to rebalance these accounts to correct these investing mistakes. For example, my biggest mistake is investing too much in Tesla over the past 3 years. I made a mistake and thought Tesla's very high growth rates would continue for at least several more years. I was wrong. I did not expect that the current high interest rates will affect Tesla and the entire EV market this much. Also, Tesla is facing a lot of competition from Chinese EV makers that sell very cheap EVs. So Tesla has to keep lowering prices to increase EV demand. Of course, this impacts Tesla's margins a lot. As of now, I believe Tesla is undervalued, but I'm not planning to buy more Tesla shares because I don't want to be overweight on Tesla stock. Once Tesla reaches close to 900 billion or 1 trillion in market value, I will likely take the gains and sell these Tesla shares. I believe that Tesla's EV sales will recover when interest rates start to drop a lot. I'm also betting that Tesla's EV sales will eventually recover because of Tesla's full self-driving FSD servers, the upcoming robotaxi servers, and the upcoming much more affordable EVs. I also believe that Tesla will eventually achieve full autonomy over the next several years. I expect all these stocks will recover and reach new highs over the long term, so I'm not too worried about them. Let's go back to Adobe. I want to show you Adobe's financials first before we talk about Adobe's biggest risk. First, you can see that Adobe has had very consistent revenue growth, operating income growth, and free cash flow growth over the past 10 years. Adobe's operating income dropped a lot in the most recent quarter because regulators did not approve Adobe to acquire Figma due to the antitrust issues. Adobe had to pay a very large termination fee of $1 billion, so this affected Adobe's operating income here, but this is only a one-time expense. Adobe has one of the best software as a service business models. Almost all of Adobe's applications are subscription-based. For example, in the most recent quarter, subscriptions contributed about 95% of Adobe's total revenue. This is why Adobe has had very consistent revenue growth, operating income growth, and free cash flow growth for many years. Adobe's subscription revenues come from these two business segments: digital media applications and digital experience applications. I will talk more about these businesses later on in this video. At the time of making this video, Adobe has a very strong balance sheet. For example, Adobe has around $6.82 billion in cash and short-term investments. In comparison, Adobe only has around $4 billion in debt and lease liabilities. This means Adobe will still have around $2.8 billion in cash left, even after Adobe pays off all its debt. If you want to understand Adobe's business, you have to look at these metrics every quarter. Digital media is Adobe's most important business. The two most important metrics are net new annualized recurring revenue ARR and ending annualized recurring revenue ARR. A positive net new ARR means Adobe is adding more paid subscribers every quarter. As long as Adobe's net new ARR and ending ARR are increasing every quarter, Adobe's digital media revenue will also grow consistently every quarter. Here's Adobe's biggest risk. A few months ago, Adobe's management gave this guidance. Adobe expects that it will achieve a total revenue between $21.3 billion and $21.5 billion in fiscal 2024. To achieve this guidance, Adobe's digital media business net new ARR will need to reach $1.9 billion this year. Adobe stock has dropped a lot recently because many Wall Street analysts and investors do not believe that Adobe can achieve this revenue guidance and this digital media net new ARR guidance this year. For example, if you look at Adobe's most recent earnings, you can see that Adobe's digital media net new ARR was $440 million. If you analyze it, it's around $1.76 billion. This is lower than the $1.9 billion net new ARR guidance I showed you earlier. This is one of the reasons that Adobe stock has dropped a lot recently. Here is another concern. Adobe started releasing more generative AI tools to subscribers recently and started integrating more generative AI tools into Photoshop, Adobe Acrobat PDF Reader, and other apps. At the time of making this video, Adobe has not fully monetized these generative AI tools yet. Many of Adobe's generative AI tools are still in beta, and they are not fully released to the public yet. It's very expensive to develop AI models, invest in AI compute, and buy image and videos to build AI models. Adobe's management is waiting until the second half of the year to start monetizing its generative AI tools. This is why many Wall Street analysts are concerned that Adobe may not be able to achieve the company's guidance this year. I believe the market is just overreacting to Adobe's AI monetization strategy. Adobe's management said this about the company's AI monetization strategy. We're talking about acceleration into the back half of the year. If I didn't feel like our full year guide was achievable, we will have a different conversation. We're confident in the targets that we put out there, our ability to meet them. If there's an opportunity to do better, we certainly will. So we feel good about where we sit in the first half. And as we look forward forward into the second half, the momentum we see from an innovation standpoint integrating into our products, what we see going from beta to general availability, we feel good about the momentum into the second half. I think as we play out the year, when we gave our targets for the 1.9 billion in ARR and the 410 million in digital media ARR for Q1, it factored in both our product roadmap and how things will evolve in the year. All of the product roadmaps, we knew whether it was Acrobat, whether it was Express, whether it was Firefly, whether it was Creative Cloud, or whether it's Gen Studio. That brings all of these together. We knew the product roadmap which we're executing against. In the first half of the year, a lot of that was beta, and in the second half of the year, a lot of that's monetization. Let's talk about Adobe's long-term growth prospects here so you will know whether Adobe will likely recover going forward. I believe Adobe has great long-term growth prospects because of these two reasons. First, Adobe's market dominance in Creative Cloud applications and Document Cloud applications. And second, Adobe's investments in generative AI tools such as text-to-image and text-to-video, which will be integrated into many existing Adobe apps. I showed you this earlier. Adobe has two major business segments that contribute around 95% of Adobe's total revenue. These two major business segments are digital media and digital experience. The digital media business includes Adobe's most popular Creative Cloud applications and Document Cloud applications. If you're a creative professional or designer or an artist, you will know that many Adobe apps are the gold standards in the content creation industry. For example, many creative artists and creative professionals use Adobe Photoshop for image editing, Premiere Pro for video editing, Illustrator for graphic design, and Lightroom for basic photo editing. Adobe Photoshop is taught in many schools. If you want to use most of these Creative Cloud apps, you have to pay $60 each month. Here's the important part. It shows Adobe's biggest competitive advantage. Once you start using Adobe's Creative Cloud and you're used to Adobe's apps, it's very hard to leave Adobe's Creative Cloud ecosystem because you will need many of these apps in your workflow. There are many competing creative applications that are much cheaper than Adobe's apps, but these competing creative applications often don't work well together or they are not compatible with each other. This is why it's very hard to leave Adobe's Creative Cloud ecosystem once you're used to it. For example, I always use Adobe's Photoshop to make my YouTube thumbnails. Then I always use Adobe Premiere Pro to edit all my videos. Here's another important part you should know. Adobe invented the PDF format. PDF is the most popular shareable document format in the world. Also, Adobe's Acrobat Reader is the most popular PDF reader in the world. If you need to open a PDF file, you will likely use Adobe's Acrobat Reader. And if you need to edit a PDF file, you will likely use Adobe's Acrobat Reader first before using other PDF apps. I believe this is a huge competitive advantage for Adobe because Adobe can often upsell subscription services to users who want to use Adobe Acrobat to edit PDFs or to sign PDFs like DocuSign. For example, the Acrobat PDF Reader is free to use, but if you want to edit and sign PDFs, you have to pay $20 per month. Other than Adobe's digital media apps, Adobe also offers these cloud-based applications mainly for marketing, content creation, commerce, and data analytics. Based on what I know, they also work very well together, and Adobe can often cross-sell these marketing and commerce applications to consumers who already use Creative Cloud and vice versa. Here's the important part about Adobe's subscription-based business model. At the time of making this video, Adobe already has around 33 million paid subscribers. Adobe's paid subscribers will continue to grow over time because Adobe's Creative Cloud applications and Document Cloud applications are the gold standards in the content creation industry. Many creative professionals and artists use Adobe's creative apps such as Photoshop, Illustrator, and Premiere Pro. I said this earlier, while there are many competing creative applications that are much cheaper, most of them do not work very well with each other. Based on what I know, there are no other companies that offer the same number of creative apps that are very compatible with each other like Adobe. As of now, the market is still concerned that OpenAI's text-to-video AI generator called Sora may disrupt Adobe's Creative Cloud business. I believe the market is completely wrong. Let me explain here. Recently, right before making this video, Adobe introduced its latest Firefly AI model that will be integrated into many existing Adobe apps such as Photoshop and Premiere Pro. But here's the important part you should know. Adobe will integrate its latest Firefly AI model as well as third-party AI models such as Pika, Runaway, and OpenAI Sora into its creative applications. This is similar to Adobe's marketplace, which has thousands of third-party plugins. Even if OpenAI's AI models are much better than Adobe's Firefly AI models, Adobe will continue integrating more AI models from OpenAI and other AI companies. This is why I don't think OpenAI can disrupt Adobe's Creative Cloud business model. If you have been following Adobe's Firefly AI model, you will notice that Adobe Firefly has improved much more compared to the previous versions. Adobe's Firefly images are much more realistic than before. Of course, Adobe will continue to improve Firefly over time. Here's Adobe's AI monetization strategy going forward. Adobe Firefly is well integrated into Photoshop. I believe this will be a very good selling point for Adobe, and if the price is cheap enough, for example $5 per month, I believe many creative professionals will upgrade their subscription plans to have more AI features and generative AI credits going forward. Also, here's Adobe Firefly's biggest competitive advantage compared to OpenAI and other AI models. Based on what I know, Adobe's Firefly is trained on licensed image and videos, so many creative professionals will likely use Adobe's Firefly when they are making content for commercial use because they want to avoid any copyright infringements and claims. According to this article, for instance, the large language models powering its text-to-image service is built on content either licensed by Adobe or in the public domain, and the company indemnifies customers against copyright infringement claims from content created with its AI tools. Adobe CEO said this about the company's AI monetization strategy going forward. In the short run, the financial community reacts to announcements. Generative AI tools are expanding the available universe of image and video that you want to edit. It's going to require more tools. Generative AI is an incredible catalyst and tailwind for us. I believe Adobe CEO is right. OpenAI and other companies' AI models will continue to generate more video and image content for creators. All these AI-generated videos and images will need more editing tools, so this is a tailwind for Adobe. Creative artists and professionals like to have control over their image and videos, so they will still need to use Adobe's creative applications such as Photoshop to edit image and Premiere Pro to edit videos. This is another example that shows Adobe's AI monetization going forward. At the time making this video, most of Adobe's AI tools are still in beta. Adobe is planning to release many of these AI tools to the public in the second half of this year and then start monetizing them. For example, Adobe recently introduced its AI assistant for Acrobat Reader. This competes with Microsoft Copilot. And if the price is cheap enough, for example $5 per month, I believe many users who already use Acrobat Pro Reader a lot will add this AI assistant feature. I believe the market is overly pessimistic about Adobe's AI monetization strategy. I also believe that the market is completely wrong about OpenAI disrupting Adobe's Creative Cloud business. This is my prediction. If we consider all the new AI features and the AI tools I showed you earlier, and how Adobe is integrating these AI tools into existing apps, I believe Adobe will have a very good chance of monetizing generative AI starting this year, but this will happen very gradually. Realistically, it will take some time for Adobe to monetize generative AI. I want to show you this consensus revenue forecast from Seeking Alpha, so you will know Adobe's expected growth rates going forward. Here, you can see that Adobe's revenue is expected to grow between 9% and 12% each year over the next 5 years. And if you look at the EPS forecast here, you can see that Adobe's EPS is expected to grow between 12% and 15% each year over the next 5 years. I believe these growth rates are reasonable. They are consistent with most software as a service companies' growth rates. I want to show you how to calculate Adobe's stock's intrinsic value here, so you will know when Adobe becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Adobe's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 10.5% here. You can use a higher discount rate here if you want to be more conservative. Based on the long-term growth prospects and Adobe's AI monetization strategy I talked about earlier, I believe Adobe's revenue will grow at a compound annual growth rate CAGR between 9.5% and 10.5% annually over the next several years. I believe these revenue growth forecasts are very reasonable for a software as a service SaaS business like Adobe. And if Adobe is able to monetize generative AI, this revenue growth rate should be slightly higher over the next several years. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that Adobe's revenue will grow at a CAGR of 9.5% over the next several years. If we forecast Adobe's free cash flow over the next several years and discount the free cash flow to the present day, Adobe's intrinsic value should be around $250 billion for the entire company, or $549 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that Adobe's revenue will grow at a CAGR of 10% over the next several years. Then Adobe's intrinsic value should be around $256 billion for the entire company, or $561 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that Adobe's revenue will grow at a CAGR of 10.5% over the next several years. Then Adobe's intrinsic value should be around $261 billion for the entire company, or $573 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Adobe's intrinsic value should be around $561 per share. I also used a forced sales regression model to estimate Adobe's intrinsic value, which should be around $288 billion for the entire company, or around $631 per share. If we take the average of both regression models here, I believe Adobe's intrinsic value should be around $596 per share. Just to compare, Morningstar gave Adobe a slightly higher fair value of $610 per share. This means I believe Adobe is undervalued by a lot at the time of making this video. So will I buy Adobe stock? Yes, I will likely buy more Adobe shares going forward, as long as Adobe is still greatly undervalued below my intrinsic value estimate. I believe the market is too pessimistic about Adobe's AI monetization strategy. Realistically, it will take some time for Adobe to start earning revenues from Firefly and other AI tools. I don't think OpenAI can disrupt Adobe's Creative Cloud business. Instead, I believe Adobe will continue integrating more third-party AI models into Adobe's creative applications. This is my prediction and opinion. I think we have to ignore the market's fear, uncertainty, and doubts. I believe Adobe will eventually recover once the market sees Adobe is starting to earn revenues from AI tools and sees that OpenAI is not disrupting Adobe's Creative Cloud business. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. It is very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.